You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday. Yes, sir. Easter Monday, 22nd day of April, 2019. Hope you had a great weekend, a great Easter holiday. Of course, you spent some quality time with your family. I mean, why wouldn't you, right? Just glad you're here now. Thanks for joining us. If you're returning, welcome back. If you're here for the first time, a special welcome to you. We're just glad to have you with us. So, again, thanks for joining. I have a chart up of the S&P 500 Emini Futures. If you can't see the chart, go to our homepage at CFRN.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. And that will give you one-click access to the show each and every day. Now, if you find yourself away from the office, away from the desktop, working off a cell phone, you can go to youtube.com/CFRN/live each day during the live broadcast, and there you'll find a real-time simulcast. Thanks to the good folks at YouTube. Thanks, YouTube. All right, the chart I have up, S&P 500 Emini Futures. I drew in a couple of trend lines last week, beginning of the week, and I pointed out just what a dangerous market this might be in this area here, and that it would continue to be dangerous until we get out of it. Now, getting out of it means we got to go higher and try to take out the all-time historic high, which I will show you right here. That would be right there. All-time historic high, S&P 500, E-mini futures. This is where we are now. We consolidated here. 1, 2, 3, 4, 5. Yeah, we'll call it 6 trading days. And now we're consolidating 1, 2, 3, 4, 5, 6. I believe we make this day 7. Okay. Put it together. You've taken a couple weeks and tied them in a knot. Now, do you see how this is different from this right here? In 2 days, well, and here, from in 3, we'll call it 3. In 3 days, we went from 2866 to 2789.50. Again, the high 866 and the low 89.50. 89.50. $64.75. See that? Okay. Now, how does that differ from this? Well, you see, we got that coming down, we got that going back up, but this is just over a couple days right here. And then sideways, and just slowly wind your way up, and more sideways. When does it end? It ends when we break above the all-time historic highs and hold them on a pullback, or we break below the BBC and hold it on a pullback, as here. Now, when this was happening, it didn't feel like it was holding, but as you can see, just when you thought it wouldn't, it did, and that led us to the worst December since, 1931. Okay, so that's where we are. And any struggles you've encountered along the way, thank the market. It's not you. Well, I mean, it could be you. Depends on where you're at on your journey up Trader Mountain. It very well could be you, but I'm going to say for a lot of you, it may not be. You just, like the market, it's, okay, it should, but it didn't. And now, take a look at this zone right here from last week, 0506. Because the market's been stuck in the same area for weeks, a lot of the zones are very, very close to being the same, right? Told you that would happen as long as we continue to go sideways. This is sideways. This, not sideways. Sideways. Not sideways. Imagine a world in which you could choose to participate in this and not this. This, not this. Is that possible? It is. It truly is. But it takes an awful lot of self-discipline. An awful lot of patience. How long could this go on? Wow. How far can these two trend lines split apart? That's how far. Will it be that drastic? Hopefully not. Hopefully it'll make up its mind and get down to business. So what does that mean, make up its mind? Well, a couple ideas. Nothing we haven't discussed before, but we'll touch on it one more time. Now, because we put in this side, this was drawn up to the all-time high right here. So if we get to the all-time high and then do a 24% fib retracement, let's draw them again. We're going to go from the low to the current high. Last time we were having a discussion about, well, what does it look like if we go back to tag the all-time high? That was that. And this is this. From the swing low to the swing high. Looks about right. The shallowest retracement that would keep the market possibly up for another leg. You see, we pull back to the BBC here, pulled back here, and we haven't pulled back here, but we could. We will at some point. Price always reverts to the mean. So if we get a pull back to the BBC, that's really not such a big thing. Price sitting at 29.06, BBC sitting at about 28.79. So yeah, this is a daily chart. That's still 25 points, right? Okay. But you see, that only gives it enough energy to just, you see these little hops? Got a little hop, shallow retracement, another little hop. On this journey, we haven't had a 24% Fibonacci retracement. That is the shallowest fib right here, 23.6. Now see how it correlates with these previous swing highs, which very well and quite possibly will become good support on a pullback. 24% fib sits at 27.80. Okay. Now that is 126 S&P points. We'll just round this down to 2,900. And shoot, we could call this 2,800. That's still 100 S&P points with a lot of rounding, which turns into 1,000 Dow points. But guess what? That's a deep enough retracement. It's still the shallowest possible Fibonacci retracement. Healthier would be a pullback to the 38, the 50, the 62. Is that even possible? It's certainly possible. But for now, we'll focus on just this pullback here to the BBC, 20 some odd points lower, or the 24, 100 some odd points lower, or 1,000 Dow points. Okay. Now, whether it comes before or after we take out this all-time historic high, which we eventually will, remains to be seen. It's not possible to know the future. To understand what the high probability thing is, well, that is possible. But to know the future, I don't even want to talk to you about knowing the future until you show me that you can change the past. You do that, we'll have lunch. All right? Okay. A little bit of news. First, you heard about cryptocurrency. Then you heard the late night comedians. Then you wondered, could it be real? Will it ever take hold? Is it even possible? And in some faraway cartoon fantasy land, you thought, probably someday they'll mine Bitcoin with nuclear power. No, they won't. Well, maybe they will. During a recent meeting with representatives of the IT industry, the president of Belarus, Belarus, reaffirmed his administration's will to protect and promote the country's digital sector and assured there's enough resources to do that. He told the audience at the High Technologies Park that Belarus will soon have surplus electrical energy that can be used to power new cryptocurrency mining farms. The head of state was referring to the new Belarusian nuclear power plant that his country is building in the Grodno region, right next to the border with Lithuania. The new atomic electric station will have 2 nuclear reactors. The first unit is scheduled to enter operation by the end of the year, and the second one will start generating electricity in the summer of 2020. The NPP will have a combined capacity of around 2,400 megawatts. The president continued, "We will launch the atomic station and there will be surplus energy. I have left some space there. We'll build farms and we'll be mining and selling those bitcoins. They say if you have Bitcoin, it's not a problem to sell it, right?" That's the president. He reminded the high-tech park community that he had been the driving force behind the project to create the special economic zone and promised to maintain his support. "We will move in the same direction. You wanted cryptocurrency, crypto exchange, mining farms, and so on. Together we will continue along this path." During his chat with the young Belarusian IT specialist, whom he called "my children," he said it out loud in a room full of people. He said, "My children, we have taken this course together with you, and we will not totter left or right. We're going forward. If you need anything, just let me know, and we'll solve any issue," he promised. The Belarusian leader assured the state will continue its support for the country's digital economy and stressed, "We will do this. That's my responsibility. I will help you as much as possible." Have you been looking for a crypto-friendly land to migrate to, someplace to hole up, someplace to become a crypto expat, American expat in crypto land? I guess you don't have to look much further than the former Soviet Republic and close ally of Russia, Belarus, which is often criticized for its authoritarian regime, legalized crypto-related activities. The special presidential decree number 8, which is called on the development of the digital economy, and came into force March 28th of last year. It introduced a tax holiday and other incentives for crypto companies until January 1 of 2023. To facilitate its implementation, the government in Minsk adopted new crypto accounting standards and later expanded the regulatory framework. The crypto-friendly policy is part of the country's push to become a global IT hub, luring businesses and entrepreneurs from around the world with a friendly environment. The Belarus High-Tech Park was established as the country's Silicon Valley. It now hosts hundreds of residents, including representatives of the cryptocurrency space. For example, an exchange licensed under the Digital Economy Decree started trading crypto assets this past January. Other companies are developing blockchain, payment, and mining solutions. Belarus. Remember, you heard it here first on CFRN. Hey, speaking of CFRN, I'm going to put something in the chat box for you here. Just a minute. As soon as I find it. I think I got it right here. That's not it, man.
And somebody's got to type something into the chat box.
Yeah, I can put it in that other thing, right?
Yeah, you can put it. Yeah, you can drop it down there.
There we go. I guess this would be it. Yep. All right. Here we go, guys. Coming into the box. Oh, I don't have to do that. And I can do this.
Okay.
And pull it up.
You can, Frederick.
Thanks, Fred.
Yeah, put something in there.
Okay. We'll see how this flies. All right. I think it popped up over there. Does it have a link? Oh, the link's not clickable, though. Link's not clickable, man. All right, we'll try it in the other spot. I don't know if that one's going to be clickable either. Anyway, you can just copy and paste it. You don't have to click it. And I'll show you what it is. There's send to all. Okay. It is the S&P E-mini daily report. If you have an Alexa device, you click this link and you tell Alexa, enable the S&P E-mini
Which
daily
skill
report.
do you want to enable?
Not now, Alexa. I'm doing the show.
Canceling.
Thank you. She's so polite. All right, I'll show you. I'll show you this, guys. When you click that link, it's going to take you here. Don't freak out. Everybody's like, "It took me to Amazon." Okay, that's what it's supposed to do. It's supposed to take you to Amazon. And when you get there, yours will say Enable Skill. If you're logged in to your Amazon account, the same one that you used to set up your Alexa, you can also go to your phone app. And in the phone app, you can say things to do, or from your mobile device, open the Alexa app, go to things to do, skills, and search the word Emini. That will take you to this page. When you search the word Emini, there's not a lot of choices. Last time I checked, there was one. Let's just see about that. What? Oh, that's because we got out of the... We need to go back to Alexa Skills. Here we go. In Alexa Skills, when you search...
Here are some popular skill categories.
Alexa, stop. I better turn your microphone off. I better turn it down. There we go. See, we pop right up. Click that. Enable the skill. And then, here's what will happen when you say, Alexa, launch Emini Daily Report.
Welcome back to the S&P 500 E-mini Daily Report. And now, from Studio A, this is Mr. D.
Welcome, traders, to the S&P 500 Daily Report. If you trade the ES E-mini or use the S&P 500 Cash Index as a benchmark... Alexa, stop. Thank you very much for your help.
Thanks for listening.
You're
We hope
welcome.
to see you back next week for another episode.
Yeah, that's supposed to say tomorrow, not next week. So still working out the bugs, but by golly, thanks for clicking. All right, so you can enjoy that wherever you are. Anytime you want to show off in front of your friends, you know, just whip out. Oh, did you know you can put Alexa on your PC? You may not have known that. There's a link in the Telegram.
I'm not sure.
Oh boy. She really wants to work. She wakes up on Monday ready to go to work. She goes to bed Sunday night ready to work. So, you know, we could all take a lesson from that. All right, let's take a look at the numbers around the world, wherever they may be. If you have any questions about the Alexa device, just go to Telegram and search E-mini, right? It'll pop right up. S&P 500 E-mini Daily Report. We're going to try to have that file updated by 9 p.m. Eastern each and every night. If you're already a partner passport holder, I don't suspect there'll be anything there that you haven't already seen or heard, but you know what? Click anyway, just because it's cool, all right? And I'll take the volume down on that voice tonight. Okay, numbers from around the world. I have some of those right here. Let's refresh the data. All right, cash markets starting here in the U.S. Currently, the Dow is down 24 points. NASDAQ is up 5. S&P 500 is up 1.25, and the Russell 2000 is down 8. In the commodity basket, crude oil up $1.91, trading 65.91 last. Gold up 40 cents. Go gold, trading 1276.40 last. In the Asian markets, the Nikkei finished the session up 17 points. Shanghai was down 55. Hang Seng lost 161 by the close. And in European markets, which my understanding was today was Easter Monday, markets closed. Nonetheless, they must have traded something. Unless these could be carryover from Friday. FTSE down 11, DAX up 69, CAC up 17. So there you have it. We know for sure it was a mixed day in Asia, and so far it is a mixed day here in the US of A. Michael, if you're ready, take it away.
I am ready.
Michael's going to give us a recap of what happened in the live training room today, and I'll be back.
Okay. Not much happened in the live training room today. And I'm doing my Tuesday meeting. I'm going to do that this afternoon at 1:15. Okay, just so everybody knows, I put the link out there if you want to get into that. If you want to get into that, I'll start it up here shortly, and I am going to do it today instead of tomorrow. Okay, let me scroll down. There we go. All right.
Did you take the charts yet?
I apparently did not. There we go.
Alrighty. It's all yours.
There. Now I am. Okay.
There you are.
There it is. All right. Good afternoon, everybody. Today is Monday, the 22nd day of April, 2019. Today, first, if you've not taken a free trial with us and you want to take a free trial with us, go to the home page here, right over here where it says 5-day free trial, apply.cfrn.net. Click on that, and you'll be brought to this page where all we ask for is your email, your first name, and how you found us. Hit the submit button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. The spreadsheet. If you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today was a very slow day, and another yellow day, by the way. Let me make that yellow. Today, we only had one trade. We only made one tick on the ES. Okay, it's a very slow day this morning. So on the month, now we're up $1,155. And on the year, 7,607. So over 69 days, averaging 110 per day. Okay, so there's not a lot to go over in here this morning, but we'll do it anyway. You can see this was the start of the day right here, and that was the end of the day right there. Well, it brings us current anyway, not the end of the day. We didn't have a single trade set up in gold. There were no trade setups at all in gold. Now, if you come to the meeting that we're going to be hosting this afternoon, in about 45 minutes, I'll show you in gold how you could have gotten some trade setups out of this. All right, there would have been a shorting opportunity. Well, if you were awake right there and in the room, there would have been a shorting opportunity there, another one there, another one there, and another one there. Okay, and then we put in a lower low. So yeah, there would have been one more. Would have been one more right over here. Okay, so if you come to that meeting this afternoon, I'll show you how you could have gotten into that. All right, I posted the link to it already. Now the euro, similar. Just no trade setups. Though, if you come to that meeting this afternoon, I can show you a few spots. One there, and one there. That would have been valid trade setups. Crude oil. I think there was one on crude that I missed. I didn't get filled on. This one right here. I didn't get filled on this, and it's too bad because I think 65.60, it dropped all the way down to 65.50. That would have gotten us the goal for the day. But I didn't get filled. And it started moving away from me before I could. So, yeah, so that was it for the crude. Let's see, did it do anything during the break? You could have taken a long right here. Okay, probably would have been a break-even trade though. And that was really it on the crude. Man, I hope tomorrow's a better day than today. The ES, this is our one tick right here. We got one tick profit on that one, and didn't get filled on that one. And let's see, during the break, it really didn't do much here during the break. Okay, it was really choppy this morning. In the pre-market, you see all that right there. That is just chop. But if we look at it on a larger time frame, like I like the 15-minute. Yeah. Really, nothing here on the 15-minute either. I would look for it to pull back down here. Now, Michael G, I don't know if you're out here in the audience. Let me go check that out, because I had just responded. Brad, it's going to show, hold on, let me find my browser. It's going to show these trade setups, okay? Different ways to use our indicator set. That, on days like today where, the stuff that we do in the room in the morning didn't produce anything, really. The other ones would have. Okay. And I was trying to quietly let people know this morning about that. But typically, well, I mean, they're for any day, actually. They're for any day. It's not just slow days, but you get more opportunities with them on slow days than you do with the stuff that we do in the room in the morning. The stuff that we do in the room in the morning, it's got to be trending markets. And like this one right here and this one right here. Yeah, they are. Yeah, come to the meeting. I posted the link. I'll post it again. Here it is. Okay, it's at 1:15 this afternoon. And for some reason, that is not letting me. There we go. It's at 1:15 this afternoon. And usually I do it on Tuesdays, but I am not going to be able to do it tomorrow. So I want to do it today. All right. Okay. So that was it for the markets this morning, guys. It was really slow. One trade, one tick. I don't know. Let's go back and look. I had one trade back here once too. Is that right? No, that's not right. One trade, yeah. Anyway, so we made one tick on the ES with our one trade. Did not get the goal for the day. On the month though, we're $1,155, and on the year, we are now at 7,607. That's over 69 days, averaging 110 per day. If you have not taken a free trial with us, go to the homepage here at CFRN.net. And right here in the right-hand column, it says 5-day free trial, apply.cfrn.net. Click on that, and you'll be brought to this page, where all we ask for is your email, your first name, and how you found us. Hit that submit button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay? If you don't click the confirmation link, you don't know that you took the free trial. And with that, we can pass it back out to fabulous Phoenix, Arizona. Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Ready I am.
Okay. There you go.
All right, one last look at this daily chart here. Recap of the recap.
Today we only had one trade today, and we got one tick, so we did not get the goal for the day.
Okay. Well, that's the truth about trading.
It is. It was really slow this morning. Really slow.
All right, I'm going to blow this up real quick. Just get one more good look at this before we go back to the smaller time frame. Now, we highlighted this area here. We've spiked above that a bit. We've not reached the all-time historic high, nor have we pulled back to the BBC. That's the shallowest retracement we would expect. 2880. 24% Fibonacci retracement, which is the shallowest retracement he would expect. 2780. So 2780 to 2900. 120 S&P points there. 1200 Dow points. And yes, some would say at that point the sky is falling. Get out, get out. But you are well informed. You would not make that mistake. You would understand that once the market starts to rally again, that the potential for it to at least partially duplicate this leg, at least travel. Imagine we get a pull back to this area here, 2780, and then you get to trade it back to the top, because once it pulls back and finds solid ground, it's going to attempt to go to this high and then this high if it hasn't already been there. See, we still don't know for certain. It seems to be a foregone conclusion if you listen to anyone on TV or your mainstream financial radio shows. Oh yeah, we're going to challenge and take out. Mostly you'll just hear we're going to put in a new all-time historic high. And we will, because this is a best of breed index. The weak ones get kicked to the curb and they bring in fresh, strong bulls. So over time, yes, there are going to be pullbacks, retracements, but over time it's going to go higher. It's built to do that, programmed to do that. Weak companies are taken out, strong ones put in to make sure it does exactly that. Okay? As long as you understand that, it's always going to head north when it's done heading south. Not it's going to head south when it's done heading north. No, it's the other way around. You got to think about it that way. If you learn to think about it that way, some of the other things that we talk about will kind of fall into place. So that's what we're looking at there. Now we're going to go back to where we're at right now, right here. On Friday, we had a Logic 247 alert to be long 2913. Never triggered on Friday. It was still valid last night on the Globex Open. 2913 to 2915. That was the initial target, 2915. And then the secondary and final target up at 2918, last week's weekly trading zone. These are all last week's zones. Partners, of course, got their zones this morning, 6:15 a.m. Eastern, as they do. As I mentioned earlier, last week's zones, this week's zones, some of them pretty close together, and that's because of this. Remember, this is decidedly different from this, okay? And as long as we have this, especially as we chop back and forth across this weekly zone from last week and flirting with zones from this week, this is what you're going to get. If the market somehow finds the strength and energy to make another run at this 2913, this perhaps might be the time that it takes us to 29.18, which then becomes another battle all unto itself. Previous swing high, swing high. You kind of get the picture here. There's a lot going on in this area, and price is going to flop like a fish out of water until it finds some oxygen up here or down here. Now if we throw this in, see how that clarifies things. Okay. Now, no matter what kind of an alert you're looking at, whether it's from us, from somebody else, it's wherever you came up with it, whatever it is, whoever said it, you heard it, it was in the wind, it was on the front page of the Wall Street Journal. Always remind yourself of this, okay? This is really simple, elementary, some might say, but hey, it is what it is. And here's what it is. We'll go back to the beginning of this turmoil. All right, over here. Price pulled back to the BBC and launched a pretty nice leg. Took us from 28.95 to 29.14, and then price pulled back to the BBC, which held. And we launched another leg, a retracement, the leg. Came back to the BBC, launched a leg, came back to the BBC, launched a leg. This time we pulled back, right? When we pulled back here, there was no pull away. There was no luring you into a false sense of longness. We dropped. Okay? And then we pulled back. You see, it's a pullback. Oh yeah, I guess you could call it a pull up. We could call it a pull down, a pull up. It's a retracement, whichever way the market's headed. If price is above the BBC, the green line, the market's headed higher. And when it's below, it's headed lower. It really is that simple. Now, it's that simple by design. We didn't just stumble onto that. It took a lot of time and blood and sweat, maybe even a few tears. Price gets back above the BBC, looking for higher prices. Price gets below. See, it's below, right there. Price is below. Does that in fact lead us to lower prices? It does. Now, once price gets back on the north side, does that in fact lead us to higher prices? It does, right? And then when price gets back below, right here, does that in fact lead to much lower prices? Again, it does. But doggone it, as soon as price gets back on the north side, look at what happens. Higher prices. Back below, lower. And then back above, so far higher. Not a lot higher, not what some might call substantially higher, but higher. Now, again, that's a very simplistic and elementary kind of a look at the market, but you can't scroll back on this chart anywhere and not find that same dynamic at work. You can deny it, say it ain't true, I don't believe it, I'm going to trade it. You can do it. You can do anything. We can't, you and I, we can't change the nature of this market, any market. We don't have that power. Now, if you're trading a penny stock and you got a lot of money, you can play all kinds of games. You can run that thing, you can eat people's lunch, you can run their stops, all that stuff you've heard about. Oh yeah. It's easy to manipulate a low float penny stock. Not so much with the S&P 500 E-mini futures. So far today, we've traded 460,000 contracts. since the Globex opened last night. It's almost 500,000. We should do 1 million today. What do we do on Friday? 1.3
John just
million.
popped in.
Okay, thanks. 1.3 million, a little over 1 million, 1.1 million. Okay, so on this Easter Monday, what do we got? 460,000 so far. Did you see what I'm saying? Okay. All right, John, let me get your mic open. It's open. Welcome to the show.
Yeah, I opened it, but
All
I
right.
don't hear.
You'll be there in a minute. Thanks. All right, let's go back up here. See, it doesn't matter how far back we scroll. That's what I was trying to say. The same dynamic plays out. You can overthink it. You can come up with all kinds of why twos and what fours as to, yeah, I don't think so. But again, it just keeps playing out. Do you run into situations like this where it doesn't go very far? You do. Nature of the market. You've got to ask yourself, when it's below, does it fall more often than it rises? Or further? Yeah. And when it's above? So now we come forward to today. Where are we? Back above. Last night on the Globex Open right here. John, you there? We ran up, put in a high at 29.15.75, hit that first target plus 3 ticks, pulled back, and rolled over. Right here. I'm not sure what came out last night at 2100 that spooked the market, but apparently something did. And we dropped. We pulled back up to the BBC, and then we put in a leg, and then we pulled back, and we put in a leg, till the market couldn't go any lower because it met a force greater than itself. And then we get back above. And now what are we waiting for? Just waiting for the pullback. Because the opportunity, as long as we're above the BBC, is on the upside. And if we get below it, it'll be on the downside. That's where it was here, 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 and here. Okay. John, are you there?
Still not hearing him.
So what time are you doing your thing today?
1:15 in about 20 minutes. So
let's take a look at the. Let's see. Come on, John. Oh, we need to take a look at the S&P cash market. That's what we need to look at. Which I have right here. There we go. SP cash. All right. So that's daily. Let's take a look at a 30-minute. There we go. Look at all these trading days right here. You draw a line right through the middle of them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. These are 30-minute candles, sorry. Go back to the daily for a minute. There we go. So right up here in this area, the most recent shelf, 1, 2, 3, 4, 5, 6. And prior to that, we had 1, 2, 3, 4, 5, 6, 7, 8, 9. Remember, these are daily candles. This little shelf here, this one here, this one here. Still waiting. Now you see how this pullback to the BBC managed to take the market higher. Here, here. When it comes back, we'll expect it to do it again. To when? Until it doesn't. And the worst thing in the world you can do is argue with the market that it's on the wrong side of the street. It is the street. And it will always tell you where it needs to go. John just sent an email, said he's fixing a issue with his microphone.
Okay. All right.
Get it fixed, John?
Just about there, I think.
That's the sound of still checking. Okay, we're going to just cruise ahead here in a moment. We'll give him another second or two. Here we are, the S&P 500 E-mini monthly chart. You can see right up here. Now, this down here, we talked about at some length. We had not had a cross of that 50-yard line on the monthly chart of the S&P going back as far as we can go back. And it looks like June of 14. Haven't had a bearish cross in that amount of time either. Now, it looked like we were headed for one last December, but then the market did this spectacular turnaround, and up we go higher. All right. We're about to get a bearish cross, or a bullish cross here on the Dow. And if we pull fibs on this from the low to the high, at a 50% fib retracement at a zone from last week, 26490. That was actually from the week before. Okay, I updated those last week on here. Yeah, same spot. Now, got this little doji crossing right here at the top, and so now we're pulling back. Keep an eye on that, because that may prove to be an important key number, key area. See where this bearish cross took place? Right at the top of that doji. There's the Dow, the Russell. Okay, which one looks like it's in more trouble? Now, we talked last week. See, there was this huge drop in a 30-minute candle last week on the Russell, and it has in no way recovered. Like the low of this candle lines up with this spike high right here. We had a leg and a retracement, a leg and a retracement, and now we're just. This says the S&P has been melting up. It appears that the Russell wants to melt down. Here's the NQ. Now these are 30-minute candles, but again, take a look at the sideways movement. If we back up, we can go to the Dow and we can, or the NQ, and we can do that. But you can't do that today. Right there. See that?
Hello.
Hello, John.
Hi there. Sorry. Is it?
Still can't hear you. I can barely hear you, just a little bit.
How's that?
Yeah, I can hear you now.
And
Yeah, I
that's
had to switch to a new computer today, and I couldn't. I threaded the thing through, and I couldn't find the wire. Sorry about that.
Uh-oh. Sorry to hear that.
Yeah.
How you doing? Do you have a nice weekend? Nice holiday?
Not too bad, thanks. I've been recovering from a little bit of an ailment, but kind of back on track today. So, the first thing I would say is that, they knocked the market down overnight, kind of like we suggested might happen last week. It was looking like it was going to pull back a bit, even though it finished kind of strong on Friday. But what was remarkable is the way the market rebounded this morning pretty stoutly. Right about 9 o'clock, Pompeo came out and said that they're not giving any more extensions to Iran regarding this oil production. So they're kind of shutting them out of the market by the looks of it.
Well, Crude went on its share last night.
It sure did. Obviously, somebody figured that this was happening ahead of time, and the market got a wind of it. And we did say, expect a rally into Memorial Day. It's kind of amazing the way it sort of happens every year, but the supplies must be tight because of the Easter driving. We're probably using more gas than ever today, and we'll continue to do so going into Memorial Day, most likely. I'm not sure if anybody saw Full Measure yesterday. It's a really great show, which hosted by Sharyl Attkisson, who used to be a New York Times reporter back in the good old days of the New York Times, not the current days.
What's it called again?
Full Measure.
Full Measure.
Yeah, that's the one I told you about last week. She had an interview with Carter Worth.
Correct.
And also she was saying how the press got it so wrong, and of course they got it even more wrong now that the Mueller report is out. It's just unbelievable the way these Democrats are trying to perpetuate this whole farce. When there's just nothing there anymore, really. I don't think they got a leg to stand on. I mean, they can do whatever they want. If they try and impeach Trump, they're probably gonna, hang themselves ahead of this next election, because I think people are just. I mean, look, the way the ratings on CNN got cut in half or more. It crashed as soon as that announcement came out. That
really?
People have been.
Yeah, I didn't hear that.
Yeah, no, MSNBC and CNN have been absolutely decimated. I mean, this Zucker, who's supposed to be the big NBC guy, and thought he was going to, turn CNN into a powerhouse, has presided over a ratings crash pretty much since they've been on this Trump witch hunt for the last few years. I think the Food Channel had more viewers in this last week, which is incredible. And they just can't get the memo. They can't bring themselves. I mean, I supposedly see some tweets last night that the New York Times has apologized to Trump, and they just can't bring themselves to admit that the whole thing was a farce and it's over, and there's not much they can do about it anymore. They can keep harassing Trump, but I think Trump's got the upper hand now. And I think if this new Attorney General starts throwing his weight around, which looks highly likely, and people who thought they were going to get off scot-free find themselves in a lot of trouble. All the way up to the top of the White House previous administration. It could, maybe they're going to be begging Trump to lay off and call it quits. That's probably what he should have done a long time ago. I think when he came into office, he was too lenient on the other side. At the get-go, you probably should have fired Comey immediately. Would have been a lot less, of a fallout, if you like. But anyway, we'll see how it all comes out. But I think they're fighting. I think the public's gotten the memo that this was a con job, and they got the first con job they got was 10 years ago when Obama got elected. How did that ever happen? And proceeded to semi-destroy the United States in the process.
Not only did it happen, it happened twice.
Yeah, exactly. And obviously, I said a long time ago, remember this convicted felon who visited the White House about 387 times in the second admin? I mean, what was every day? There's obviously a huge thing going on and he was behind the disruption of the Trump rallies, which is a felon, a serious offense, inciting violence and paying people to do it. I don't know why nobody's ever picked up on that. By the way, did you see the email I sent you about?
I saw it, but I haven't opened the link yet. Let me go back and take a look.
Well, look, could it be a conspiracy theory? It could be, but this Seth Rich thing has been sort of kept under wraps, big time. Really since it happened. And I think I told you this story before. One day, this is how, I'm shocked, when I'm right on top of a lot of things going on with the Twitter. And by the way, thanks very much for doing some of the work over the weekend. It's starting to come together really nicely. In fact, when you go to the big page, it sort of doubles the size of Twitter, and it's really quite vivid, some of the pictures. So I was just moseying around one afternoon, and I saw a tweet from Seth Rich's mother, I think it was, and I kind of retweeted it, and I mean, bang, like in like a nanosecond, I was shut down just for retweeting, I think, like a totally innocent tweet.
Really?
People had this guy's name in it. Yeah, I mean, holy mackerel! Kind of just spooked the heck out of me, and I had to get through all the rigmarole to get it back on and everything. But this is what's happening to a lot of people. I mean, people are. I mean, look, there's a lot of loonies out there who are saying all kinds of crazy things, and they get shut down or suspended all the time. I mean, it's just a regular occurrence. But some pretty big people recent. I mean, James Woods. He's got 2 million followers. They shut him down a couple of days ago. That's for something.
Reason?
Well, he's pretty provocative. He doesn't hold back, and he said something out there that upset somebody, and he was he's still suspended now. So I mean, I think it's an outrage that a public company can carry on like this. It's just a disgrace. But anyway, so what makes this thing different that I sent to you is the guy who is behind it, or part of it, exposing this whole thing, is a guy called Bill Binney, who is an ex-CIA guy.
This guy right here.
He's one of the old school guys, from way back, and I think he's the real deal. And he got in. He did a whistleblowing job or something a while back, and got into a whole world of hurt over that. So but he's exposing. Well, there's been this communication between Seth Rich and Julian Assange, which Julian Assange kind of, without reveal, he kind of hinted about it when it all happened, and he definitely said the Russians weren't the source. I mean, this could just blow this whole thing sky high, because I mean, it's highly likely that Trump's been right all along. I mean, Trump's the president. He gets a lot of sources. I mean, he's got. How do you think he found out he was being spied on in the Trump Tower? I mean,
Right. No, that's a good point.
It was Admiral Rogers who was one of those, NSA types at the time. Basically blew the whistle and let him in on what was going on. So, and ever since then, it's just ballooned out of all proportion. And when you watch this, it wasn't in the last issue or edition of Full Measure, but several previous documentaries or reports that she made explained how this, when they got Carter Page, why did they? I mean, they got 4 FISA warrants on him. I mean, the guy was basically a confidential informant to the FBI and the CIA, and they still went after him. I mean, it's just so outrageous. And then when they surveil you, I mean, they can cover about 25,000 people. It's like an exponential. Because of all the people that Carter Page talks to, like if he was talking to the Irish guy who used to be in the White House, the one who got fired.
I can't think of his name.
Anyway, they were talking to him. He was talking to him for sure. So that immediately gave them the ability to surveil Trump because he was in the loop, right? And so it goes a lot more than 2 deep. It goes several levels deep.
Wow.
So
That's
everybody
pretty far-reaching.
Exactly. So it's about 25,000. It's a multiplier of about 25,000 people. So, I mean, you got no idea what they could have been up to. And they could have been surveilling just about everybody on the Trump campaign, everything that was said, everything that, the entire, everybody's personal communications plus their campaign communications, the whole thing. I mean, it's why it makes Watergate. It's like Watergate to the power of a million or something. I mean, it's just so much bigger. It's staggering, and this is a total abuse of government power in a way that's just unfathomable. But we went over this a while back. Roger, that director out of Hollywood, interviewed Oliver Stone interviewed Putin about four major interviews, 4-hour interviews. Was riveting. And I mean, Putin was pretty adamant that he had nothing to do with this. And listen, we know they got hackers and stuff, and there's a lot of stuff going on, but Oliver Stone is a pretty, I don't think anybody gets one over on this guy, and he's a bit liberal as well. So he kind of laid it out at the time, and this whole, all these, well, it wasn't 17 agencies, it was only 4 in the end that colluded, that agreed that there was Russian hacking. But I mean, are the Russians that stupid to leave fingerprints all over the place or create them? I mean, it's just it's just crazy, the whole thing. And in this article, they're talking about the time and place when these, where this stuff originated from was probably a flash drive that downloaded the information. I mean, and then you've got .com, the guy in New Zealand, Kim.com. I mean, he says categorically that this is what happened, and he knows his way around the net like nobody. So the whole thing, and this business with Hassan right now being arrested. I mean, I'm surprised he hasn't blown the whistle already. It's kind of crazy that he hasn't, but to get him some way, this story gets out, and it turns out that it wasn't the Russians. Trump's gonna. I mean, that I think will get a landslide victory for Trump for sure. There's no doubt about it, because people are going to say, he's just about everything that Trump has, been, accused of outrageous statements and things has turned out to be true in the end. I mean, almost every single thing he's come up with.
Just about.
and he's you know, the climate change. I mean, you know, this is Earth Day. Happy Earth Day to everybody, but don't, you know, you don't have to commit harikari just yet. You know, I think we're going to get through it. The Earth's been around for billions of years, and it's probably in better shape in some ways today than it's ever been.
How long does AOC say we have? 12 years?
Yeah, but, you know, there was a thing, even the founder of the Earth Day was on a thing yesterday on a show I was looking at, and he was showing, remember I told you about the smog in London back in the old days?
Mm-hmm.
And he was talking about the smog in Pittsburgh and the steel, and all that's gone. And even a lot of the smog in Los Angeles is gone. Unfortunately, it's not the U.S. I mean, do you think Trump did the right thing? Right. Well, you know, Trump did the right thing by getting out of the deal in Paris, because it was basically subsidizing the Chinese. I mean, the Chinese and the Indians to pollute. I mean, how crazy is that? That's. I mean, if you don't understand that, you know, that was the deal. And the U.S. of course, was paying all the, you know, so many billions up front before anybody else chipped in. I mean, it's just a complete scam. I mean, you can't even believe these people negotiated this deal. It's just like the Iranian deal, you know? I mean, when you look at some of the cronies who've been running the government before recently, I mean, you have to ask yourself, how do these people ever get in these positions? People like Brennan and Clapper and all these guys, I mean, just unreal. And, you know,
high levels of air pollution in China's cities caused 350 to 400,000 premature deaths.
Uh-huh.
I don't know. This is on Wikipedia, so I don't know where they get that information from. But according to the World Bank, China is one of a few countries in the world that have been rapidly increasing their forest cover. Interesting.
Well, that's good. Yeah.
They're trying to
Sorry, I'll be back in a minute. Good.
Yeah, go right ahead. Hundreds of thousands of premature deaths and incidents of serious respiratory illness have been caused by exposure to industrial air pollution. Now, this is some old data. I mean, it's 2011. Yeah, this goes all the way back to 97. We're talking 20 years ago. Wikipedia, update your page. My goodness. All right. John said he'll be back. We'll see. In the meantime, good word for the day. And then we'll get back to this crazy sideways market. So it seems. Judges 14:8 says, in it he saw a swarm of bees and some honey. Are we talking Pooh Corner? That's Winnie the Pooh. Taking time to reflect, part 1. Now that's something we all should have done over this holiday weekend, given the reason for the holiday, and in particular on Saturday. I hope you thought about it on Saturday. Hey, what were the guys feeling? What were they thinking? One day, Samson encountered a lion and slew it. The Bible says in Judges 14:8 through 9, sometime later he went back, he turned aside to look at the lion's carcass, and in it he saw a swarm of bees and some honey. He scooped out the honey with his hands and ate as he went along. That sounds kind of like a Winnie the Pooh thing, right? Now there's a lesson here. When you take time to stop and reflect, you discover honey in your experiences that you can eat and grow stronger and wiser. When you reflect, you're able to put things into perspective. You gain new appreciation for things you did not notice before. Few of us have clear perspective in the heat of the moment. The last time you were in the heat of the moment, how clear was your thinking? How quickly did you regret your thinking in the heat of the moment? Most of us who have survived a traumatic experience usually avoid similar situations at all costs. This can leave us with unresolved issues that leave us tied up in knots. Reflective thinking enables you to distance yourself from the intense emotions of an experience and see it with fresh eyes. Indeed, this process is one of the first steps to getting rid of our emotional baggage. President George Washington observed, "We ought not to look back unless it is to derive useful lessons from past errors and for the purpose of profiting by dearly bought experience." Each of us has been shaped by the experiences, good and bad, that we've had in life. What we refuse to deal with deals with us, and often in harmful ways. We act out of our unresolved issues, but when we bring them into the light and ask God for the grace to face them squarely, they lose their power over us. And that's our good word for the day. Welcome back, John.
Yeah, thanks. Sorry about that. So, I was looking at the NASDAQ. I noticed that the NASDAQ composite just got above 8,000 this morning, and which is a pretty lofty level. We still think it could go to 11,000, 11,500 before it's all over. But it is, when you look at that chart, it begins to look like a big double top, just separated by, about 9 months or so. And, it's just the way the world works. I mean, it's kind of like this terrorist thing over the weekend. Who saw that coming? I mean, it's just terrible. I mean, there's nowhere safe. You really can't. I mean, there's, the British family was blown away, wiped out. The father lost his whole family. Just terrible. And when you get a kind of a trend line like that that we're looking at, it tends to be an accident waiting to happen. It could break up. Could it break up? Sure, it could. But if it breaks up, it might overreach and fail. It probably would be healthy, to be honest with you, if it were to trend down and test the 7,000 level maybe, or 7,200, and then go back up. It's got a better chance of going up for another leg and running substantially higher. But you can't rule it out that it might just keep going, because we're in a kind of just an unprecedented situation. We've never been, the U.S. economy has just about never been in this position before, where we're just hitting, we're hitting on all cylinders, and every month it's getting better. I mean, if you're adding 200,000 jobs a month, that's 200,000 new people in the economy who may have not been working for a long time, and all of a sudden they've got money in their pocket and they're maybe buying a house or renting or getting furniture or buying a car, and just generally spending like they haven't done for a long time. And the cumulative effect of 5 million new jobs, 5.5 to 6, going on 6 million new jobs over the last 2 years, is a huge, in an economy with 158 million people. Incidentally, I'm breaking news, because I don't think you heard this anywhere in the mainstream media or anywhere, because they're so focused on, the Russian hoax right now. They don't even want to mention anything good. But the U.S. economy hit an all-time record high just in probably this month or just recently. It's a $21 trillion economy, and we predicted that on this show like a few months ago, if you remember. And if we keep going at this rate, we'll be a 24 trillion economy by 2023. The one thing that's going okay, but it's way off where we used to be, which is the manufacturing jobs. back in 2000, the U.S. had about, I think it's 17 million manufacturing jobs, either 17 or 19 million. And it's not even 13 today. So we've lost, 5 million manufacturing jobs. And even though we've gained back, 500,000 or so, that's not going to be that much big of a deal by 2023. It's only going to be about 13.5 million, according to these projections. So if we had 5 million manufacturing jobs today, like extra manufacturing jobs like we had back in 2000, the economy would be, off the charts. A couple of things that are off the charts that are worth noting is the railroads, which nobody ever pays much attention to because it's kind of like last year's technology kind of thing, or last year's transportation. Mm-hmm. The railroads are making all-time record highs. That's very bullish when that happens. And I guess you could say similarly for the airlines. I mean, the transportation in general it's not at an all-time high yet, but the fact that the railroads are really off the charts is remarkable. And just going back to this full measure show, yesterday they did a fantastic report about the Permian Basin in Texas, which is supposedly the biggest oil field in the world's ever known right now, with potentially hundreds of years of oil there. Known reserves, I guess near-term reserves, if you like, exploitable reserves are about 45 billion barrels right now. And that's the reason why the U.S. is the number one oil producer in the world today, which is a stunning accomplishment by any measure. And if you remember in 2008 when we went to 150, the world was running out of oil, and there was a lot of press to that effect. Here's
the Dow transports right here on this chart.
Yeah, but if you look at the railroads, I'm not sure if the symbol is RR or something, but the railroads are definitely making a new all-time high. Maybe you can Google railroad index or something like that. The saying, I mean, we're still, what they don't tell you is, I think, even though we're probably doing about 13 million barrels a day now, close to, we still have to import the difference from Canada and Mexico, because we use about 18 million barrels a day or 19 million barrels a day. But they're saying that by 2024, we could be exporting 8 million barrels a day. I mean, that is an unbelievable. I mean, if that's, that could mean that the U.S. would be producing north of 20 million barrels a day, 25 million barrels a day, which would be twice that of Saudi, or more than twice of Saudi Arabia, more than twice of Russia. I haven't had that confirmed, by the way, but that's what one of these. See what I mean? But look at that railroad index. Is that something or what?
That's a month. That's a monthly chart.
I mean, it's massive. But I think one of the reasons why is because a lot of the oil is getting shipped by rail, and and grains, and with the grains being so much grain around, and oil, and containers, because there's so much container traffic. I mean, it's like a lot of people don't know this, but the fastest way from China to Europe is not by ship; it's by rail. The rail goes all the way.
Say that again now.
The fastest way from China, is not by ship; it's by rail. The fastest way to Europe, goes all the way from I think it's Guangzhou or one of those big hubs, mm-hmm. through Kazakhstan and through all the Asia, right into Germany, right into and gets onto those high speed lines over in Europe. So and that the Chinese are, being the experts in high speed rail, are probably going. This Silk Road is going to become a very big deal soon. Where rail probably have a 2 or 3 day trip, or maybe a little bit more than that. But remember, high-speed rail. This isn't Kim Jong-un's train going down to Vietnam. It took 60 hours. This is a potential high-speed rail hurtling across Asia in the future, carrying all kinds of cargo, which is an amazing proposition compared to the shipping that goes on. So one of the speaking of shipping, and this is something that is a little bit of a worry in terms of watching that chart, having got up to where it is that the Baltic Dry Index, which is a fairly good barometer of world trade, is way off its highs, and it's kind of a little bit of a bad omen in a way. And it's kind of turned up a little bit lately, but it's nowhere near its record highs for sure. And I don't know whether that's maybe there is more a trade being done by rail now that's taking away from the shipping. Maybe the fact that there's so much oil, or more oil, and maybe the fact that the U.S. is not importing gargantuan amounts of oil anymore from Saudi Arabia, or is actually depressing the shipping, just the amount of shipping that's being shipped. The carriage of oil could be one of the reasons. So there might be a lot of factors.
Well, the oil field off Alaska that Trump had opened, they've now been closed by a judge, correct?
Yeah, it's only a kind of an exploration. I mean, that's a long way from being in production.
It's not in production, okay.
No, and it's kind of just kind of like the offshore Atlantic that's being kind of challenged as well. But I mean, with this Permian Basin, it's almost it might be prudent not to exploit those areas for the time being, because they got more than they can handle in Texas. And it's interesting because it's going right into New Mexico. The Permian now covers a good part of New Mexico, which is potentially good for the New Mexican economy. Because obviously, if you're an oil-producing state, you're in pretty good shape. I think the Alaskans get $2,000 or $3,000 a year, just like a kind of a bonus for every citizen, just from the oil in Alaska. And as you know, Norway is quite a significant producer. I think it's one of the top 10 producers in the world, and there's only about 4 million people in Norway. So their superannuation, if you like, their sovereign wealth fund is so rich. It's just amazing. I think it's certainly north of $1 trillion. I mean, it's $1 trillion. Imagine $1 trillion being shared by 4 million people. It's a pretty big deal. And incidentally, Ireland. I was looking at something that came up on the net a few days ago, and little old Ireland is, believe it or not, has the highest per capita GDP on the planet in terms of for hours work or hourly wages. They're at the top of the list.
Really?
Yep. Yeah. So that's pretty unexpected. It's kind of remarkable. I'll send you a copy of that. I'll try and send you a copy of that later.
Because Ireland was doing so well, and then it went in the ash can.
Well, it didn't look like it was. The amazing thing is, it didn't look like it was ever going to get out of it, because there was banks went upside down, and quite a few things happened, and all that. Then had a property crash of monumental proportions. Kind of like the U.S. did, but maybe even worse over in Ireland. And they really started to bounce back around late 2014, 15. And if you remember, I mentioned this before, they had one quarter where the economy grew by 21% in one quarter. I think it was in the either December 14 or 15 quarter. I mean, 21% growth in one quarter.
Wow. That's pretty
and
cool.
And they haven't looked back since, And the amazing thing is, because of the Brexit, who'd have thought that Ireland would be almost twice as wealthy as England on a GDP basis, and somewhat more wealthier than the U.S.
How much do Google and Apple, just to name a couple, contribute to that?
That's the whole thing. I mean, it's Silicon Valley 2.0 or brackets Europe. And all the look. You've got a large number of pharmaceutical companies represented there, and some of them are making stuff. Making drugs in Ireland. Eli Lilly has been there for decades, and Microsoft, Google, Amazon. A friend of mine, his father works for Amazon at the board level, and he was over in Kinsale eating at the fishy restaurant, because they've got a big setup in Cork apparently, and Dublin, I guess. So it was kind of, you got pretty high-powered people, flying in and out of Ireland all the time, and they're just winning every way. Because of retirement, they got a very good deal. If you're a writer or an artist, you can practically live tax-free in Ireland, which is great for those kinds of people. Yeah. So that draws a lot of money into the country. The tax rates in general are highly favorable. I think the corporate tax rate is as low as 10%. So that's the reason why. Unfortunately, the Democrats sort of every day are bashing the tax cut, because it's for the rich, but nobody ever really kind of corrects them properly and challenges that, because they don't understand that it's not really a tax cut for the rich. It's a tax cut for the corporations, because the reason why the economy was going down the tubes before was the corporate taxes were too high. And what's really powering the economy today is corporate taxes are, palatable, if you like. I mean, if you're paying 21%, the incentive to cheat or try to, get around evade taxes is drastically reduced. Offshore tax havens and the risk of being involved in those kinds of things diminished substantially. And moreover, there's trillions of dollars coming back into the country. So it's just a perfect scenario, and 21% is a reasonable sort of a rate. And look at what it's doing to the economy, and it's bringing businesses in. Bringing worldwide businesses. I mean, the U.S. has gone, has become a kind of a fiscal paradise in a lot of ways, in a manufacturing center or paradise, because they're able to compete on a global scale for the first time in decades. Instead of the giant sucking sign of 5 million manufacturing jobs going out the door, and 70,000 corporations leaving the country, they're coming back, and gradually the country's wealth is being restored.
Good to see.
So we live in great times, and like I say, the economy. If we just keep going at this rate, continuing to do a couple of 100,000 a month. Maybe the unemployment rate drops down to 3.7, 3.6. I think Goldman Sachs said a while ago could go down to as low as 3.2, 3.3. That would definitely get to be a pretty tight economy. But ultimately, the other benefit is, wages. Wages have been so upside down over the last 20 years, where just about everything has gone up in price except wages, and that's why everybody's been having such a tough time just making ends meet, because almost everything is anywhere from 50 to 400% more expensive. And but there was another chart. I'll have to send you this, because it's if I can find it. There was a really great chart showing the growth of all the different countries going from about 1960 onwards, and the U.S. is at the top of that list. There's nobody, not even China, can touch it. Even though China's caught up and accelerated over the last 10, 20, 30 years, it's still not catching the U.S. It's closing the gap for sure, but it's not. The U.S. and when you look at the Federal Reserve, and in spite of all the different people who've been running it, for better or worse, arguably overall they've done an incredible job because they've managed to maintain a pretty good lead over the rest of the world, and that's a lot to be grateful for. The question is now, can it be sustained with a 22 trillion debt? And I think, by the way, the debt's going to be 24, 25 trillion by 2023. So it's just going to keep
yesterday,
going.
Jamie Dimon said, well, that's nothing.
Well, it's interesting. I was thinking about it this morning. If you didn't know about it, it wouldn't worry you. And there's a fellow out there that I've mentioned before who thinks it's a kind of a plus to have a deficit. So, it's kind of, we've said this before. Look, Japan today is like 3 times the debt of the U.S. In terms of per capita, relative to the GDP. I think the debt is 3 times the GDP. We're at 1 time. By the way, the debt as a percentage of the GDP, I'm not 100% sure on this, but it looks like it. In 2009, it was 10% of the GDP. I think it's down to. Sorry, the difference.
It was a third.
Yeah, it's down to maybe it was 110% of GDP. It's down to 104% right now. So it's actually, relative to GDP, the economy is getting stronger and the debt is actually declining basis the growth of the GDP. Now, the one thing that remains to be seen is, having achieved this kind of momentum, I think at some point, maybe in the next couple of years, the GDP kind of multiplies and it kind of gets ahead of the debt, and they may be able to, the debt may actually get paid down somewhat. Now, the budget that Trump put out recently, which definitely helped the market go higher, arguably reduces the debt very, very substantially over the next 15 years. But the reality of that actually happening, I don't know. It's kind of a bit of a stretch, but you can never say it couldn't happen, because we've been at these levels twice before in history, after World War II and back in the 30s, and the debt, twice almost got back to to almost being not there. The last time that was in 99, 98, 99, when there was a temporary surplus, very brief surplus period. Before spending got out of control.
Right. Anything else you want to cover, John?
No. Listen, thanks very much for the input, and look forward to tomorrow. Much obliged.
Okay. See you tomorrow.
Bye.
Okay, guys, that's going to do it. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.